Hello, I'm Steve Lyon. Welcome to Business Today. Now let's begin in China, where manufacturing activity has contracted in August for the fourth straight month, and that's according to the latest official data. Meanwhile, sales of new homes continues to fall as well, despite efforts by the government to prop up the market. Now, the month of September will also be closely watched by investors, with the U.S. Federal Reserve due to meet in a few weeks. Now, for more on all of this, let's speak with Jameel Ahmad. He's a Chief Analyst at GTC. Jameel, let's start with China first. I want to get your reaction to that China housing and manufacturing data and what it means for their economy going forward.
Steve, it doesn't make for good reading at all. As you pointed out, it's the sixth straight decline. And more concerning, it's the fourth straight month below 50. Now, the number 50 is that line in the sand separating growth from contraction. And clearly, the China manufacturing sector is still in contraction. But we should also take somewhat of a glass half full approach. We do know that China is trying to transition its economy into more high-end products, technology, and other sectors. Actually, the non-manufacturing PMI came in above 50, so it does show some growth. Nonetheless, the question to ask now is whether this number, alongside the previous numbers, puts doubt into the 5% government growth GDP target. In September, we can't really answer this with any confidence, but if the manufacturing PMIs continue to lead and point down that road below 50, then fears are going to grow as we continue into the end of this year.
Yeah, let's turn our attention to the US as well then and talk about US jobs data. That's out this Friday. Will that have any impact on what the Fed decides to do? We know they're meeting in a few weeks.
We are looking at potentially the highest risk economic event of the year so far, because what we've seen so far, Steve, August was unprecedented for some global markets volatility. And one of the catalysts behind this was actually concerns that US economic momentum, after being very robust and resilient for the past 18 months or so, is showing signs that those rocks are falling and the momentum is falling with it. We do expect for the Fed, the US Central Bank, to cut interest rates this month. But what's concerning is that Fed policymakers have had a poker face of not giving too much away until recently. We had a very weak economic data release for the monthly jobs report in August. And we've also seen a data revision where up to 850,000 jobs were potentially overestimated between April of last year and March of this year. So if we do have another weak monthly employment report any of this week, we're going to have more concerns growing that the US economy is finally starting to really hit the floor in terms of that economic momentum robustness of the past 18 months or so falling slim.
Yeah, and that will make things rather interesting as well going towards the US presidential elections in November. What are the risks for the markets as we head towards that vote?
Well, the seesaw has been finely balanced between whether it's Harris or Trump over recent weeks. But before then, it was looking quite leading that Trump, the former president, would return once again. Clearly, that's where the risk would be for financial markets. That's because it's the unknown. But what we can say with some fairness is that Trump 2.0 is likely to be Make America Great Again. But this time, I think it's going to be on steroids with the growth tactics, the pro-America policies. And we also have to take into account the last time, although everything was very unprecedented, uncertain for prolonged periods, he was fantastic for the US currency and he was fantastic for US financial markets. So we might be looking at a more insular stance where investors look towards US markets should we have Trump win the November presidential elections. But globally, we could have concerns over trade tactics, what might happen for the relations with China, and so forth. So I do think that's the unknown. But as we're heading closer into that date, we do see the balance being more fairly between Trump and Harris. But I do expect to have a lot of uncertainty as we approach the final 2 months of the campaign.
All right, thanks, Jameel. We'll leave it there. Jameel Ahmad, Chief Analyst at GTC.